Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. Today, you could buy the euro when the price reaches around 1768, with a target of 1.1790. At 1790, you could plan to exit the market and also consider selling in the opposite direction, targeting a 30-35 pip move. Growth in the euro today can only be expected after weak US data. Before buying, make sure that the MACD indicator is above the zero line and just starting to rise from it. You could plan to sell the euro today if there are two consecutive price tests of 1.1756, while the MACD indicator is in an oversold area. This will limit the pair's downward potential and lead to an upward reversal. A rise toward 1.1768 and 1790 can be expected. You could plan to sell the euro after it reaches the 1.1756 level. It's red line on the chart. The target will be 1734, where you could intend to exit the market and immediately consider buying in the opposite direction, targeting a 20-25 point move. Pressure on the pair may return today amid a hardline stance from the US and Iran. Before selling, make sure that the MACD indicator is below the zero mark and just starting to decline. You could also plan to sell the euro if there are two consecutive price tests of 1.1768. While the MACD indicator is in an overbought area. This would limit the pair's upward potential and lead to a downward reversal. A decline toward 1.1756 and 1734 can be expected. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, the GBPUSD pair on Monday, April 20, returned to the resistance level of 1.3513, 35.39. A rebound from this zone on Tuesday will favor the US dollar, and a resumption of the decline towards support level of 1.3428, 34.37. A consolidation above 35.13, 35.39 will allow traders to expect a move back to the resistance level of 35.96, 36.20. The wave situation remains bullish. The latest upward wave broke the previous peak, while the last completed downward wave did not break the previous low. Geopolitics gave the bears almost complete dominance in the market for 2 months, after which the geopolitical background supported the bulls for 2 weeks. At present, the situation in the Middle East risks escalating again, so the bears feel more confident. However, the geopolitical vector can change at any moment. For now, bulls still dominate the market. On the 4-hour chart, the pair consolidated above a descending trend channel, which allows for expectations of a full-fledged trend. After the formation of the bearish divergence on the CCI technical indicator, the pair reversed in favor of the US dollar and consolidated below the 38% retracement level at 35.40. Thus, the decline may continue toward the levels of 34.82 and 34.39. However, the chart pattern on the hourly time frame is currently clearer, so we recommend relying on it. Now, new emergent divergences are observed today. That's all for today. See you online soon.